Welcome to today's market report. European shares hovered at 5-week highs on Tuesday following a 3-day rally that was sparked by hopes of more US stimulus, while Airbus slipped after JPMorgan downgraded its rating on the stock. The pan-European STOXX 600 was flat, with gains for utilities, real estate and telecom stocks offset by declines in the travel and leisure and auto sectors. The benchmark index on Monday ended at its highest level in nearly a month as investors held out for Washington to agree on fresh federal aid and as data pointed at a stable recovery in the world's second biggest economy, China. New figures on Tuesday showed China's imports in September grow at their fastest pace this year, while exports extended strong gains. Analysts say reason why stocks are strong is because regardless of who wins the November 3rd election, investors expect a major stimulus package. Now, the sooner the House agrees to a deal, the more durable the equity market rally. President Trump hopes to boost his chance of re-election by providing stimulus quickly, but according to House Speaker Nancy Pelosi, the White House's latest proposal is grossly inadequate, so it's highly unlikely there will be agreement on a big stimulus package before 3rd of November. But Treasury Secretary Mnuchin and White House Chief of Staff Meadows are hoping for a quick win with a vote to approve the use of untapped Paycheck Protection Program funds. The unpredictability of stimulus headlines leaves data and the Fed speak as the only scheduled catalysts. The U.S. calendar is busy this week with inflation, retail sales, manufacturing data, and the University of Michigan Consumer Sentiment Report due for release. Federal Reserve presidents are also expected to speak every day this week. Although wage growth slowed in the month of September, a further recovery in spending is expected. The same is likely for manufacturing, but inflation will remain low. Consumer sentiment will be interesting because even though stocks rallied, confidence could take hit from the abysmal performance by both presidential candidates at their first debate and Trump's contraction of COVID-19. In corporate news, Airbus stocks dropped 3.5% after JPMorgan downgraded its investment stance on the aircraft manufacturer to underweight, citing a more cautious view on air travel in 2021. It cut its view on Airbus deliveries next year by 10%. Rolls-Royce, which makes engines for the likes of Airbus, slumped 7.5%. The troubled manufacturer had posted strong gains on Monday, with investors reacting well to the multibillion-pound rescue package announced last month. Oil prices pushed higher on Tuesday, recovering after losses of just under 3% during the previous session, but excess output continues to plague the market, along with ever-rising COVID-19 numbers hurting global demand. A slow economic recovery from the pandemic threatens to delay a full rebound in world energy demand to 2025, the International Energy Agency said on Tuesday. U.S. crude futures traded 0.4% higher at $39.59 a barrel. Brent contract rose 0.4% to $41.88 per barrel. Gold futures fell 0.3% to $1,924.15 per ounce. On the FX front, GBP USD recorded fresh 5-week highs around 130.80 at the beginning of the week on the back of renewed optimism surrounding the UK-EU Brexit negotiation. Next on is the upside Allies 131 level, but cautiousness is seen growing ahead of the EU summit. While the overall strength of sterling is impressive considering the looming Brexit deadline and rising virus cases, Johnson made it clear that he is ready to walk away if there is no agreement with the European Union by Thursday. The main issues are fishing rights and state aid. The EU wants the UK to follow its state aid routes and give their fishing fleets full access to UK waters. Extending the 15th of October deadline is also an option, but regardless of whether that happens, if an agreement is not reached this week, sterling will crash lower. The economic outlook for the UK is grim. The government introduced a 3-tier lockdown plan that will weigh heavily on growth. Euro-dollar remains pressured around 118 as market sentiment remains tilted to the risk of mood on Tuesday. The US dollar gained some ground as the more risk-averse sought a safe haven following news of Johnson & Johnson's setback with its COVID-19 vaccine candidate. Dollar index was up 0.1% at 93.227, regaining a little after falling to 3-week low of 92.997. This is today's market news. Thanks for listening. We'll see you next time.